was fascinated, Yolanda, on your insights into the funds management industry, which I think we all sort of recognise as well as being a boys' club. The one issue, and I'd like to take up, I think, the question that came from Stockland. I think the frustration from many of our members is the apparent disconnect in some of these debates around what asset owners are saying, but what fund managers are actually doing. So I think most of our members would say that the primary focus of fund managers continues to be on short-term performance. Now, some of that may be cultural. Some of it, I think, is also the incentive systems and the incredibly competitive environment out there in terms of what active managers are having to compete with, particularly in terms of index and quant funds. But I think most of my members would say that traditional fund managers are not asking questions about long-term performance. They're asking questions about short-term performance, and their performance and their funds flow is being dictated by short-term performance, which is a concern. I think over time that may change, but certainly at the moment that seems to be the feedback we're getting, and certainly always my experience over the last 10 or 15 years, that this is there is still quite a disconnect there between what your asset owners are saying about the importance of long-term and what the people who are managing their money are actually doing in terms of looking at short-term performance and short-term issues.
Can I make a comment on that?
Yeah, sure. I didn't come up here to kick.
No, you're right, but just to make a comment on that, because I hear this often as well, and I think the difference is that the ESG, who's an ESG person in this room for a asset manager? No, okay. So the ESG managers are having the conversation, and they're having that conversation with boards. But when boards have an ESG person say, tell me about diversity or tell me about your climate risks, so they're having those long-term conversations, the board don't see the head of ESG as an investor. It's when they hear the conversation from a portfolio manager or an analyst, then they think investor, even though it's the ESG person that's of course influencing to a certain degree. So I think, I can't help but think there's a bit of gender bias in that as well, because ESG people are probably disproportionately women as well, but I'll put that point to one side.
Look at the panel.
I think the questions are being had, they're just not being had by the PMs and the analysts, and the boards are saying, well, that's not as important because it's just the ESG person asking, and ESG people aren't as important as PMs and analysts. Anyway, that's...
interestingly though, at most investor meetings, the ESG person's not there. It's the portfolio manager or the analyst.
Yes, the ESG person will have a conversation separately.
Yeah, absolutely. Yeah. Okay. So sorry, I didn't mean to distract you.
You're right. I think it's a really valid point. Yeah.
Okay. So firstly, I'd like to thank Daphne and S&P for jointly hosting this with AIRA, and for the presenters and panellists who I think have done a fantastic job. I won't endeavour to summarise what everyone said today, because much of it was well over my head. But I think there were three takeouts, I think, particularly from Martina's. Is firstly the scale of the CSG investment, and the particularly outside Australia. I think Australia's probably lagged a little bit in terms of scale, but we'll catch up quickly. Secondly is the pace of change which is coming down the track. And for members, I think to stay abreast of that is going to be quite challenging. And in an environment where many corporates are actually under pressure in terms of cost, I think there's going to be some quite interesting conversations had about how do I resource this. And then third, I think just the increasing complexity. When Martina talked about 17 goals and 230 indicators, I shuddered, and luckily I don't work for CBA anymore, because I think there are some real challenges there, and I think the complexity of this, and I think many corporates I don't think understand just how complex it is, and also what sort of resources need to be actually applied to actually keep abreast of what's going on, let alone keep at the forefront of this. Now, I think diversity and those sort of things have been taken up, but there's a whole range of things there which I think are complex and which are going to continue to be complex. So in terms of AIRA, and those of you who don't know what AIRA is, we are a body which represents investor relations professionals. We really recognise the importance of ESG, to the extent that last year we for the first time launched an ESG program or education program, which we'll be repeating this year on the 13th of July. Those of you who haven't attended, I would urge you to. It was very useful. A lot of input, particularly from ESG professionals, and both, particularly from within the investment industry. And then AIRA is currently working on an ESG engagement guidelines, which have been, I think, sent out to members looking for people's contributions. So we'd urge people to contribute to that, and certainly we've sent that to the industry as well, and particularly to a number of the the asset owners to get their indication of how they would like to see engagement going forward. So thank you all for your contribution, panel in particular, Martina and Daphne for co-hosting this, and thank you all very much for coming.
Thank you. Thanks. Thank you.